Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of Nigeria's Q4 2022 foreign trade in good numbers. Last week, the National Bureau of Statistics (NBS) published Nigeria's fourth quarter 2022, Q4 2022, which is October to December, foreign trade in goods, physical goods, merchandise trade numbers, which revealed the total foreign trade declined by 4.5% or 555.2 billion naira quarter on quarter to 11.7 trillion naira from 12.2 trillion naira recorded in the previous quarter, Q3 2022 July to September, but rose moderately by 0.1% year on year, or 15 billion naira when compared to Q4 2021. Foreign trade is all about imports and exports. Foreign trade is an exchange of capital, goods, and services across the international borders or territories. All countries require goods and services to satisfy the wants of their people, and no country can produce all the goods and services it needs. The country must buy from other countries what it cannot produce or can produce less than its requirements, importing, and sell to other countries the goods it has in surplus quantities, exporting. Based on the reports, total imports dropped by 15.5% from 6.3 trillion naira in Q3 2021 to 5.4 trillion naira in Q4 2022. Similarly, imports declined by 9.7% year on year compared to 5.9 trillion naira recorded in Q4 2021. The drop in imports in Q4 2022 can be attributed to the decline in the importation of petroleum products, gas oil, and jet fuel, as well as wheat. The impact of rising inflationary pressures and continuous FX depreciation on consumer spending led to a decline in demand for imported goods. Meanwhile, total export rose by 7.2% quarter on quarter to 6.4 trillion naira in Q4 2022, compared to 5.9 trillion naira in Q3 2022, and was up 10.3% year on year from 5.7 trillion naira recorded in Q4 2021. The quarter on quarter growth can be linked to the increase in oil production due to improved security measures taken to curb oil production theft. For context, oil output rose to 1.33 million barrels per day in December 2022, its highest since April 2022. Nigeria's trade balance was positive. Exports exceed imports at 996 billion naira in Q4 2022, a significant improvement from a trade deficit of the negative 409.3 billion naira in Q3 2022. Exports accounted for 54% of the total trades, while imports was 46% compared to the ratio of 48% to 52% in Q3 2022. The increase in trade surplus can be attributed to the rise in oil production as well as non-oil exports. The top 5 trade destinations in Q4 2022 include export trading partners: Spain 9.7% or 617 billion naira, Netherlands 9% or 574 billion naira, India 7.7% or 490 billion naira, France 7.7% or 489 billion naira, and Indonesia 7.4% or 473 billion naira. Import trading partners include China 25% or 1.3 trillion naira, Belgium 10.9% or 585.6 billion naira, India 6.8% or 368 billion naira, Netherlands 6.8% or 365 billion naira, and the US 5.9% or 319 billion naira. Here are our thoughts. 1. The share of manufacturing and agricultural products to total exports remain low at 4.9% and 2.6% respectively in Q4 2022, with the share of oil and oil-related products at 88.7%. This shows our FX sources rely solely on oil proceeds, better explaining why Nigeria continues to experience endless currency depreciations and rationing. 2. Nigerians spent a total of 2.89 trillion naira, which is 696 billion naira in Q4 2022 on food and beverages, primary and processed in 2022, which is down 2.1% relative to the 2.92 trillion naira in 2021. 3. To improve non-oil exports, the government should prioritize subsidizing production over consumption to grow Nigeria's share of exports to diversify its FX sources. 4. Additionally, deliberate efforts to add value to our abundant resources are essential to earn more value from our exports rather than exporting raw materials and importing finished goods. This will boost employment in the country and reduce insecurity. 5. A comprehensive industrialization policy should be developed to provide more clarity on how the federal government plans to support manufacturing sector businesses. 6. Remarkably, robust infrastructure, adequate power supply, and consistent policy, trade, fiscal, and monetary directions should be given more priority. 7. The private sector's support is required to put these in place as government revenues continue to come under significant pressure. The sector can play a critical role in supporting the government's efforts by investing in value addition activities and promoting the export of locally manufactured products. In summary, we feel the incoming administration can address these challenges by prioritizing policies that support the growth of the manufacturing and agricultural sectors, promote value addition, and provide an enabling environment for businesses to thrive. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.